Hello, I'm Oliver Renick, host of Chicago Future of Finance, broadcasting live this week from SIBO's Risk Management Conference in Munich, Germany. Let's recap day two with Senior Director of SIBO Labs, Nishank, who's been plugged into all the panels today. We had a great show on Chicago Future of Finance. What have you guys been up to? Tell me about the things that stood out to you today, Nishank.
Oliver, it's been a fantastic day. I mean, our clients are just peppering us with questions. They have so many thoughts. We've had a bunch of podcasts, some interviews. We've heard from finfluencers, Liz and Jenny.
Yeah.
Let me start off with that, right? So
Okay.
They gave us an insight into the retail world, right?
Okay.
And they're talking about there's condor strategies and strangle strategies and how the retail world looks at that when VIX is below 18 and when VIX is above 18. I mean, that's fascinating. I'll be the first to admit, I didn't realize retail was that sophisticated.
Well, that's why the tasty people are the ones to, lead that message, because that's what I love. One of the main themes of Chicago Future of Finance is education.
Right.
And the tasty team and Tom Sosnoff, who came from TD Ameritrade, that whole family of thought with JJ Keenahan, who started our network, TD Ameritrade Network, the Tasty Network. And then you've got last week at Robinhood, Steve Quirk, formerly at TD Ameritrade. The Chicago education really has put the retail trader front and center in a way that we talked about on my show today too, where they're doing things that are institutional in style or just very sophisticated.
That is true. That is true. We were talking about institutional, right? We had Derek Devens from Neuberger Berman.
Oh, he's great.
He's absolutely brilliant. He spoke to us about differences in volatility between the US markets and the non-US markets. And there's one thing that really stood out to me, and I hope I'm not stealing his thunder when I say this. He spoke about EFA being a great hedge.
Okay.
And he spoke about why, right? Because when you look at vol risk premium, which is the difference between implied and realized, it's still rich for EFA, but it's much more rich in SPX. So if you want to be selling SPX vol, you could potentially use EFA vol as a great hedge.
Interesting.
That resonated with me.
Well, he is in a very interesting process, and he's a great person to kind of tap for knowledge and ideas because he thinks very cross asset. We talked with him about crypto yesterday. Obviously equities, options. And I think he's a good representation of kind of the knowledge base here, which also includes another theme, which is artificial intelligence. I know that you guys talked about that today.
AI has been front and center the entire time, not just today, yesterday. We have some more talk about it tomorrow. But let's focus on today.
Okay.
Right. So we had AWS, right? The head of their capital markets telling us how they're increasingly getting more and more requests from different people, different firms, on setting up an AI desk, setting up an AI database, right? Having agents as part of the regular workflow.
Yeah.
So I asked him, what does that mean? What does that actually mean in the day-to-day? And this is what he said. It means you can hire 1,000 first-year analysts to do jobs at that level of work without actually having to hire 1,000 first-year analysts.
Yeah.
And that's incredible.
It's margin, it's time.
Right.
Hey, we've got AI on my show, the Insight platform, ICTV. It's like my pseudo co-host, And today we were using it to talk about, how the market will think about Fed cuts. There's a lot of things in the process, I think,
right,
from a financial investment perspective that you could probably, describing what happened in the market. And giving some kind of basic understanding of how to use that information. The AI can get, step 1, 2, maybe 3.
Exactly. So you could use AI for forecasting. We heard from Peter Weiner. He manages, he co-started Volworks, right? And he was telling us about how he uses AI as a way to make decision-making. He's using large language models, LLMs.
Yeah.
And he's fed in all his thought process, and it's actually helping him choose what trades to put on. Now, obviously, he micromanages and he makes sure everything is it's the way it should be.
Yeah.
But it's helped by AI.
Yeah. It's, why not, right?
Yeah.
If you have a place where you can make your process simpler or, systematic in some way, and here's the thing is those people who maybe would have done those kind of entry-level analyst jobs, they'll find something even more sophisticated and find an edge, right? Like,
oh, absolutely. Like I personally, I don't think AI is replacing anyone's jobs.
Sure.
It's augmenting our jobs, right?
I think
helping
so.
us do what we do better.
Yeah.
In the same way where computers didn't replace us.
Right.
Right. Can you think of actually going into a workplace and not having a computer?
Right. Yeah.
Right?
Yeah.
Right?
True.
Think of AI in the same way.
Or calculator. Right.
Calculator. There you go.
So let's talk some of the investment themes as well. Some of the things that we talked about. on the show. And tomorrow I'm excited for the panel that I'm going to be hosting.
Yes.
Cross asset and risk mitigation and correlation risk. Today, you guys talked about tail risk, and I know a little bit of liquidity risk too. So kind of tell me what some of those major portfolio themes were today.
Right. Great questions. I'm going to break it down into two parts. Right?
Okay.
So you asked me about tail risk. My eyes light up because it's one of my favorite topics.
Right. Yeah.
Okay. Lon Johnson from PGIM, right? Manages a big book. He's been there many, many years. He was telling us about the rise of RILAs, right? They're kind of like buffered outcome structures, but it's somewhat new. It's taken off in the last 4 or 5 years. And he mentioned some numbers. I'm trying to remember if I say this rightly. There's $74 billion of issuance in RILAs this year.
Wow. Okay.
That's pretty massive.
Yeah. I'm thinking about buffers at Vest, and they're at like 50 billion or so. So, I mean, that's
right. It's right up there.
Yeah, getting big numbers.
We're all talking about buffers. We're not really talking about RILAs yet. So I think that may be the next big thing to start taking people's attention towards.
Yeah. There's a lot oriented around trying to, prevent the tail risk to the downside. I know the guys I'm going to talk to tomorrow, they're more about hitting the gas,
yes,
and not worrying about the downside, but, having a break there if you need it.
Well, exactly. But if you want to hit the gas,
the
one thing you need to look out for is liquidity.
Okay, there we go. Perfect transition.
And when you look at liquidity, the liquidity in the US versus the liquidity in Europe, they're very different things. So we have people from Optiver and Citadel, right? Like some of the biggest shops are XOFA.
Yeah,
right?
Guys who were on the floor of the SIBO, by the way, a lot of them. Yeah,
precisely.
Yep.
And they were telling us about how liquidity changes. The profile of liquidity changes and the way in which you access liquidity changes as you move from the US to Europe. So whether you go through auction trading or block trading, whether you're accessing liquidity through screens, which is more US than Europe, right? Or block trading, which is more Europe, or your own capital commitment, which is really both places. You really need to take a second to understand the market structure before you put on big trades.
Correct.
Very important.
You have to know that it's stable, right?
Right.
That the bridge is built before you start walking across it.
Precisely.
Trying to dance on it.
Precisely.
Great stuff, Nishank. You're a very good student of markets, in addition to participant and in the infrastructure of it with SIBO at SIBO Labs. Nishank Modi. Day 2. We're not done yet. Tomorrow.
We have half a day tomorrow.
Half a day tomorrow.
And I can't wait for this. So thank you again. We're looking forward to talking to you more.
All right. You're the man, Nishank Modi. I'm Oliver Renick. Tomorrow, tune in. If you're here, don't miss the conversation, the panel in the morning, a risk management discussion with 2 people who hurt themselves on bikes. Thanks for tuning in.